And looks like we can also do the recording today. Welcome to our webinar this week. Compared to last week, we hope we don't have as many technical glitches. I see there's quite a few people logging on still. I expect a full house. So like we do with every webinar, any questions you have, just type in the question box and hopefully I'll be able to answer your questions. And hopefully with today's webinar, it's also being recorded. Those of you that were on the webinar last week, I did record it afterwards and I did send it out. If you didn't receive it, just let me know and I'll resend it to you. Okay, so the topic is looking ahead to 2016, and the idea is that last week we looked back over 2015, obviously more at the political scene, the economic scene, and how they impact on the market. In this webinar, we discuss some trading picks for 2016. We'll talk about stock picking just now, but by using simple technical analysis, my background is such, I'm a technical analyst, we'll be coming up with a list of bullish and bearish shares, and from that list, we'll choose which ones to go long and short. So just quickly, that was a quick overview, but here's the agenda. So we'll be looking at some predictions. Now we'll touch on more in more detail just now. But those of you that know me and been to my face-to-face seminars, I always use the expression that my crystal ball's battery is flat. I don't like making any predictions because despite I believe that no one can see into the future. But saying that, on the next slide, you'll see my sentiment when it comes to predictions. Yeah, so yeah, here's a quote from Casey Stengel: "Never make predictions, especially about the future." So that is the gist of my presentation today. A lot of people always want to know what's going to happen. I wish I knew. I won't be sitting here doing a webinar. I'll be very, very rich if I can see into the future. So my presentation is more along the lines of trend analysis. I'm using technical analysis to help us establish what's happening on the markets right now. And there's a old cliche in the market: the trend's your friend. So that is, as I say, the crux of it. So I find it's much easier to have some kind of method to help us predict where the market's going. So some of you might have looked at this before. It's one of the methods I use for what we call a top-down approach. One of the methods we use, what I call a prospecting method. It's one of the safest ways to go from the general to the specific and determine or to try and find where are the opportunities. So you can look at international market. So let me go back one step. Imagine a funnel, a lot of information going in here and a little bit of information coming out the bottom. So the idea is they're going from the general to the specific. So the idea is looking at the big picture and then zooming into local picture. So international markets, economic indicators, exchange rates, precious metals, how does that all impact on the local market? When I say local market, JSE All Share. Within the local market, break down further into industries, your financial sector, your industrials, and obviously your mining resources. Within those different industries, we break it down to specific sectors and then ultimately down to the shares. So that's a process you would go through with a top-down approach. From there, I like to bring in the fundamentals as well as the technicals, as well as portfolio management strategies. So that is the process you'd use in a top-down approach. So saying that, the whole idea is to have a view. You're using technical graphs and charts and things like it. Helps me determine what's a trend. So I'm a trend follower, and this is what the whole presentation is about. Using trend following techniques help me establish where the market's going. So just as a quick aside, if I had to look at some predictions for the year, I was listening to Simon Brown on Just One Lap, his predictions for the year. I'm not into that, as I say, picking what stocks, and you see a quote just now about picking stocks. Anyway, this is looking at the US markets, and more specifically S&P 500, which is a broad measure of the US economy. So this is a weekly chart showing the long-term trend. And the main idea here is that we're looking at a 7-year bull market. That's number one. And number two is that obviously we've got a slowing call a slowing global economy. We're also got rising interest rates in the States, and the relationship of interest rates in the stock market is like a seesaw. So as interest rates are going to rise, the prediction is that markets will fall. But from a technical point of view, you can see, first of all, if I bring in my little cursor here, hopefully this will work. Whoops, bring in my spotlight. So we're testing this support level here. We're testing this long-term support level. We're trading below a 50-week moving average, and we're trading just above a 200-week moving average. So, and this is quoting Simon Brown. Let me just get rid of this again. He anticipates that, sorry, let me just go up, that by the end of the year, the S&P 500 will be lower than the start of the year. I anticipated to pull back at least 50% of the previous retracement level, so we can anticipate back to these levels here from 1900 points down to about 1400 points, 500 points of correction. That's one way of looking at it. You can see for a long time the market has been highlighting a change in trend. This is what we call bearish divergence. So the oscillators have been doing the opposite to what the market's been doing. The market's been getting up higher, and the oscillator's been ignoring it and doing the opposite. So yes, we anticipate a bit of a pullback. So we're at a very important, crucial, or very important turning point right now. This is data until Friday. Sorry, I did this on Monday, so it's Friday's data. So looking at what I saw here, I was anticipating that we could break out through these support levels and move down a bit lower. So that's US markets. And the main thing that I want to highlight today is, talk about market sentiment. Market sentiment can either be bullish or bearish. And right now, I would say the market is leaning more towards bearish. There's a lot of uncertainty on the market, especially around China. I'm talking about China, by the way. This is Hang Seng Stock Exchange. We've seen that big pullback last year. We had a very important support level at the moment. And yes, we are getting close to oversold levels. We might have a little bounce by anticipating more downside. We've seen that the GDP figures came out this week, or sorry, today. Market consensus was 6.9, came out at 6.8, so it's in line with market expectations. Wasn't as bad as expected. Maybe we had this little rally this morning, and since then it has dissipated. But again, this is the second biggest economy in the world. We anticipate the market's a bit lower than we're starting right now. That's just looking at it right now. It's difficult to say what's going to happen in 12 months' time. I'm doing a bit of a thumbsuck. But right now, looking at the charts, I anticipate a breakout below support levels. And if a breakout below support levels, I anticipate the market to go lower. Looking at the dollar, this is the dollar here, and this can go anyway. The trend at this point in time, this is when it goes up, it means that we have to spend more dollars to buy 1 euro. Dollar weakness. When it comes down at the moment, this is where we are. So the dollar is strong. It's got a lot to do with, obviously, perception about the economy, money flowing back into the States. So this can be hovering around the sideways market for a bit longer. So it might be sideways to slightly stronger. This is the dollar. And obviously impact on that. If the dollar is strong, it's going to impact on the rand. It's going to impact on commodities, etc. So this is the way you look at it. And at this point in time, we need to look at, it needs to move above those moving averages. Yes, we were making this low as higher than that one there. So we're at a turning point. We're hitting this 50, is again a daily chart. We need to break above that. You need to break above the support trend line, which has inverted the trend lines around to see a change in trend. So obviously, if this goes up, if that dollar starts getting weaker, the rand can get stronger, commodities will be more in favor, especially people that buy commodities in dollar terms. So this can go any which way. So talking about the rand, we're bouncing around very close to that 16, 17 rand to the dollar. Yes, we are overbought. We might pull back. We might pull back to the resistance trend line, to the moving average. But again, the longer term sentiment would be rand weakness. The main thing here with rand weakness, take advantage of it. So either being exposed to rand hedge stocks, we're talking about them in more detail just now, or trading currency futures. Okay, so at this point in time, I anticipate a bit of a pullback soon, but the longer term trend is still down. Going into commodities, we spoke about this last week. There's a CRB index. It's a basket of 19 commodities. We had 6-year lows, so we might have this little bounce. You can see also we oversold. We might have this bounce back to the top of the up channel, which is the resistance trend line over there. So you might have a bounce, but you have to say, why would it bounce up? People's discounting demand from China, that kind of stuff. We don't see that. So we have a low demand scenario. We also have an oversupply scenario. We need to get rid of the oversupply scenario. And we see that for oil prices and things like that, especially with Iran coming on board now. We have a supply glut. Okay. So a lot of uncertainty. And this is where I find making predictions very difficult. So yeah, we're talking about the JSE. And again, the JSE is also, we're testing the lower support trend line of a long-term up channel. So very similar to the US markets. We've had a 6 or 7 year bull run. We're testing support. We still, sorry, I forgot to put my moving averages on here. But again, a very important turning point. We could be a bit lower at the end of the year, but at this point in time, we're a very important turning point. So that's difficult to make those predictions. If I go one step further and look at the top 40 index from a valuation point of view, this is the top 40 large cap stocks. We have pulled off the high from 21 P ratio. We're trading around about 17. So we're still not cheap. Okay, down here at 12, we're cheap. Yeah, at 17, we're still fair value. You can see the inverse of the PE ratios, the earnings yield. We're getting close to that 6%. Dividend yield, 3.4, that's the average. So we might have this, you can see we moved below the support trend line. You can see we're moving below that 50-day moving average, pulling back to that retracement level. You might have a switch or this move out of the top 40 stocks into more of the mid caps. Remember, most of the top 40 stocks are Rand hedges. So we might be moving out of the industrials, Rand hedge stocks, and might be moving more into the resource, or especially the gold and platinum miners, or more the gold miners. We've seen this little run recently. So maybe the switch, but again, it's short term. This is the mid caps. This is the next 60 companies. You see from a valuation point of view, same thing, around about 17 PE. We are not cheap. So where are the opportunities? So you have to find a home for your money. So stock picking will be very crucial this year. That's number one point I want to make. If your stock picking is spot on, I believe that end of the year you'll be making money. So it's very important to have it. So here's a little quote that's from Daniel. Most successful pundits or experts are selected for being opinionated. Okay, I don't want to come across as a pundit or an expert or a guru. I don't want to come across as flouting my opinion, because it's interesting and because it's interesting. Okay, and the penalties for incorrect predictions are negligible. You can make predictions, and a year later, people won't remember them. So that's why I don't like making predictions. Trading with what I'm seeing right now. Trade what you see, and that's what I'm seeing on the market right now. So let's talk about bullish and bearish sectors. If I had to scan the market using technical criteria, objective criteria, moving average crossover, 50-day crossing above or below, 200-day moving average, number one, and number two, find me the sectors that are outperforming relative to the JSE All Share. That's a starting point. And this is the point I'm trying to make. It's using technology to help me find the shares at this point in time. In a month's time might be different. 6 months' time might be different. So it's difficult to make those kind of predictions. Okay, so this is what I did. I did a quick scan of this of bearish and underperforming sectors based on moving average crossover, as well as market underperforming. And I came up with quite a few sectors. Last week's webinar, we discussed the sectors that were the worst and best performing from a growth point of view. This week, we're looking at homing into what are the sectors that you'd go long and go short on, or more specifically, the shares. So the banking sector, you can see it's trading way below its moving averages. The banking sector is in a bear trend, okay, and looks like it's still got a lot more downside. This is the banking sector relative to the JSE All Share. So I'm taking one data stream divided by another data stream. The trend is down, so this is market underperforming. I use an analogy of a horse race. If you had an opportunity to bet on a horse race, halfway through a horse race, which horses would you like to bet on? Ideally, you want to go with the potential winners, the horses near the front. So if this graph was the opposite and trending upwards, you go with the potential winners. Yeah, at the moment, you're betting on the horses near the back of the race, the potential donkeys. So banking sector is out of favor at the moment, but the point I'm trying to make is a bit of a contrarian. Don't write these off. These are the shares you want to add onto your watch list. Everybody's dumping the stocks. What's the best time to buy these kind of stocks? When everybody else is selling, you want to be buying, and when everybody else is buying, you want to be selling. So add the banking stocks onto your watch list, and I'll highlight one or two stocks just now as an opportunity. The food and drug sector, we spoke about them last week, the retailers and that kind of stuff, also in a bearish trend, also market underperforming. So we'll go into more detail, some examples just now. And then the industrial sector. So you've got the banking sector, which is more the financials, and the industrial sector in the bear trend, as well as also underperforming. That tells you something, huh? What's the opposite? Where is the activity happening? So let's talk about that. So the bullish and outperforming sectors, you can see it's much a smaller list. And it was quite interesting to see AltX, which is the alternative exchange to the main board. And that was performing very strongly. So obviously with all the uncertainty on the market, you really want to get involved in little companies like that are small or obscure. Maybe that's where the secret lies. You know, we're under the radar screen. They're in the niche market. There are not many stocks on the AltX that are offering any call it opportunity from a growth point of view, number one, and number two, there's not really undervalued stocks. So be very, very careful when you're looking at those smaller cap stocks. It's more important is financial risk. Do we have cash flow? Do we have interest cover? That kind of stuff. And then we start looking at valuations and profitability. But looking at this list, it's quite obviously interesting to see beverages, and this is a lot to do with breweries. Very strong sector, so this is running like crazy and outperforming. And then secondly, was consumer goods, also running very strongly. So it's a bullish trend and outperforming. And the last one I want to highlight, more recently, it's got to do with the rand play, the rand weakness. Gold's been hovering around, it's been quite steady as such, but this is more of a rand play. So you can see how that's been, and slowly it's turning. So yeah, when the 50-day crossed below the 200-day moving average, we call that a death cross. The trend is bearish. Anything below this is negative. Now we're about to cross again, well, it has crossed. So this is good news. So we're getting up to what they call the golden cross, which is a positive. And we're starting to outperform. So let's look at specific stocks. Sorry, here's a quote from Barry. Whenever you try to pick market tops and bottoms, you are making a prediction. Guessing what stock is going to outperform the market is forecasting, as is selling a stock for no apparent reason. Indeed, nearly all capital decisions made by most people are unconscious predictions. So that gives you some food for thought. Okay, so I'm not into predicting and I'm not into forecasting. You must have reasons for buying and selling. So that should give you some, as I say, food for thought. So let's talk about some individual stocks. So I did the same scan on the same scenario, but now on the top 100 stocks. These are the stocks we trade on single stock futures and CFDs. And it was quite a nice little list that came up, but some of them picked up British American Tobacco. These are the industrial rand hedge stocks that have been outperforming for quite a while. So yes, it is a play on the rand. So this is a stock you want to trade. So I always talk about high probability trading. You want to bend the odds in your favor. So first of all, the primary trend, the bull trend, is bullish, so you should be more on the long side. Number one, and number two, it's way outperforming the market. So this is a strong stock, so you should be going long on the stock. But saying that, is it too late to buy? So this is more of what I call a momentum trade as opposed to a breakout trade. Those are two of the strategies I like to use. So you should have got into a British American Tobacco way back in September. We had a sideways market. Breakout trading this is especially the pattern I always try and look for. It's a sideways market, and I have mentioned before, I use an indicator called ADX that highlights for me a possible sideways trend. So we trade breakouts, but we look for consolidation areas. But right now, if you're in the trade, I'll be having a very tight stop loss. You might be using the 50-day moving average as a stop. If it moves below that, I'm out. But going back here, this is where you would like to have got in. So way back here, that's where you would have got in. and this is what I want to highlight for you. We always say you want to buy low and sell high. Remember, with momentum trading, we're buying high to sell up higher. Okay, so you can measure the sideways market, and that distance between the support and resistance levels, it can add on the breakout, and you can see ultimately we reach that target. Okay, so this is where I find breakout trading works. But right now, I'll be buying in the dips like we're getting to now, and then we're using the moving averages for momentum trade. So yes, this momentum trading, I'm chasing the hot stocks with ideas might go a bit higher. So that's British American Tobacco, and obviously more recently SA Breweries, or now AMB InBev. Similar chart. Where would you have got in? Way back here. You can see for a long time we moved sideways, we're hitting the resistance level around about the 690 level. And then obviously when they made an announcement, it jumped up very strongly. A lot of us thought, it's too late to buy, could have bought in the dipper game. But look what happened since then. It went only stronger. Okay, so again, that scenario, breakout trading, that would have been ideal time. So right now, on breweries, I anticipate more upside. You can see the RSI and stochastic still got a bit more upside. So the RSI indicator might be turning down. But again, riders very closely, watching it very closely for a momentum trade. And then lastly, SAPI, which is more commodity stock, but also a bit of a rand edge, also very strong. You can see that was a golden cross there, a strong outperformance. Again, a momentum trade right now. Again, that's where you got in for a long time. We touched it quite a few times. That was your breakout there. And then you rated again. Ridded it out, and you exceeded your price target. Okay, bit of a divergence at the moment. You can see that this high is lower than that one, lower than that one, where the indicator is making higher highs. So this is what we call a more of an aggressive trade. We're going for high risk with potentially higher rewards. Okay, so just be careful of that kind of trade. We want to focus more on the high probability trades, high rewards at low risk. And then on the bearish side, which ones would you go short of? There's only 4 little trades that came up, and I chose 3 out of that. AVI, you see it's below its moving averages, so the trend is bearish, the trend is down, and we're underperforming. So this is a stock where you can go short right now. This is until Monday's data. We're trading in this bit of a range here. A breakout below that 71.16, below that level would trigger a short trade. So anticipate it's going much lower. So this is a trade you would go short on. Anglo Vol Industries. Remember, I referred to the sector, food and drugs, and this might be one of the food producers. So you can see that, again, that sideways market, you can use that range and just add it to or subtract it from the price right now for target price. And then we had Imperial, logistics company, also below moving averages, underperforming, and anticipate more downside. It tried to fill up its gap. If I bring my cursor in here quickly, it filled that gap up, but we're hitting a resistance level, and looks like we get more downside. So we will go below that previous low. So again, another stock you'll go short on. Okay, and then lastly, Investec. We're talking about the banking stocks. As a banking stock, you'll go short on, undervalued, and also about to cross confirmation with the moving averages. So again, a breakout trade. Go short when it breaks out below 97.45. So primary indicators will be my candlestick charts with my support and resistance trend lines. That's my simple technical analysis I use. With the RSI and stochastic, those are secondary indicators, just confirming that the trend is still down. So very simple analysis. So that is my predictions right now. In a week's time, might be different, another list. So what you do is on a Sunday, what I do on a Sunday afternoon, I scan the market, look for these opportunities, and I predict or anticipate which stocks I'll be shorting and going long the week ahead. It's difficult to do for the whole year in front because you don't have that data up front. Okay, so I hope this give you some insight to very basic technical analysis, but that's my secret. I believe it's a secret to successful trading. Keeping it simple, keeping it short, don't complicating it, and just having some game plan in place. So in conclusion, I focus on what I call prudent trading. You want to go for high rewards at low risk, and that's what this kind of strategy does. High probability trading, uses breakout trading a lot, And also I prefer the trend following strategy. Okay. What's very important, yes, you're talking about methodology on the one side, but most important is risk management. So your stop loss and position sizing, especially in this kind of market, we have a lot of uncertainty, a lot of volatility. I believe it's going to be important going forward. Okay, so let me just see what kind of questions we were coming through forward. Yeah. Oh, no picture. I hope you guys can see pictures. I don't know why you would not be seeing pictures. Dr. Adam, for you, no problem, pleasure. Your Sunday runs. Benjamin, you can do your own little scans on a Sunday afternoon. There's a question from Mr. Van der Merwe, Lenza Van der Merwe. I bought DBX US and DBX last week. Should I sell or how long should I keep it for? It's a difficult question. Are you a trader or investor? And obviously it depends on your view. I'll keep them for a longer term, anticipate more rand weakness, and you want to take advantage of that and anticipate that those markets also do well. So I'll keep it up. Eleanor, Capitec, yeah, I believe Capitec is also in a bearish trend. So it's the same scenario. Yeah, it looks like there's all the questions coming through. Visuals okay, no problem. Will you give these analysis again during the year? Cornelius, good suggestion. Maybe in the middle of the year we can do analysis again. Yeah, we'll see how it goes. But I really appreciate you guys writing these questions out. What is your opinion about property stocks with a high yield, 6% even with a capital loss? Eleanor, good question. End of March, the 30th of March, I got the guys from Call Shares come to talk about ETFs, property ETFs. So I know it's March. The problem with property stocks, the yields and things like that are related to interest rates. As interest rates goes up, obviously the yields come down. I like more, and I've mentioned this before, more the offshore stuff, the NEPIs and the redefined internationals. Yeah, those are the ones I'd look at. Should I keep Anglo? Very difficult one in the sense that yeah, we are on a bearish trend with all the resource stocks. So you might have a little bounce once in a while. Depends again, are you investor or trader? Remember, all these, this is not, I'm not going to give you, seeing as giving advice. I'm just giving you my view from a technical point of view. Yeah, difficult on all those resource stocks. Dr. Falyun, DBX US, I haven't looked at the charts for a while, but I presume this, you know, it'll be still from a fundamental point of view, taking advantage of the rand. Okay. What's a good trading platform for small investors like me to get into trading? Lenza, it's a PSG's trading platform. We don't have a minimum investment, which is obviously taking consideration the costs. You know, with 1,000 Rand, our minimum brokerage is 98 Rand per trade. 1,000 Rand, your shares move up 9.8% to break even. I suggest you save up until such time you've got 10,000 Rand, then your cost, the percentage is about 1%. But use our trading simulator just to understand how the platform works, first of all. And then secondly, obviously, to gain the confidence in your stock picking abilities. Marie, Rainet, offhand, I can't remember what the chart looks like. You know, it's indirect exposure to British American tobacco still. So yeah, I'll go with a run on that if you want exposure to that. Here's a question from Terence. Do you have a broader view on when the next upcycle will be for commodities? Well, Terence, what I'll do is I'll look up your email address. I read somewhere last week that these guys were predicting that we still got a long way down for commodities. They weren't very positive, so difficult one. But I'll get back to you on email on that one, Terence. The overseas markets are rolling over. How do you expect the DBX trackers? Yeah, obviously we'll have some pullback on that because it's obviously the derivative on the underlying market. But I think what's going to compensate for that, Eleanor, would be the weaker rand. Maria, Coronation, again, I also need financial stocks, and all the financial stocks have been hammered at this point in time. So if you're an investor, I believe that they're becoming more fair value, but they still got a long way to go before we're undervalued on some of those stocks. Okay, wow, a lot of questions today, guys, and I really appreciate the input here. Cornelius, good question. Do you have a suggestion for new reading material on stock picking? The best thing to do is, I always say, Google's your best mate in that. There's a website I always like to use called Investopedia, investopedia.com, and you'll pick up a lot of articles in there. And also upcoming webinars will discuss some more stock picking. And again, it depends on your strategy. Are you an investor or trader? Because if you're an investor, you'll be leaning more to the fundamentals, and you'll be leaning more towards either being a value investor or growth investor. As a trader, you're using various strategies also. We've been talking about breakout trading and momentum trading. But stock picking comes down to, I believe, there's always the two sides of the coin. I'm looking for stocks that are undervalued, profitable, with manageable risk. And then also combined with that, I want to look at stocks that are in trending, it's outperforming the market, and also preferably in the dips. What is my success rate using the simple analysis? Very, very good. And you can look at a lot of other investors out there or traders using the simple analysis. Breakout trading works. That's a question from Andrew Heesum. So Andrew, it does work. You get a high probability. It's high probability trading. So it does work. David, yeah, if you can please send me your view on commodities before the next upswing. Tell me when is the next upswing. I'll be impressed also. I want to learn trading, but currently more as an investor. That's Cornelius. Yeah, two different strategies. I suggest they have two different accounts, two different strategies, two different thinking hats. William, good question on Sasol. Is it too late to sell Sasol? I think to a large extent, with Iran coming on board now, the cat's out of the bag, so production's coming on board. We're hovering around about this $28 level. Bit of politics going on at the moment with OPEC and the shale gas guys. They want to get these guys out of the market, but there's an oversupply of oil in the market. So it's a difficult one. Is it too late to sell Sasol right now? Still a good quality stock, still be paying out dividends. Last time I looked at Sasol, I think they were trending sideways. So a lot of uncertainty around that stock also. Okay, looks like that's all the questions. Quickly, let me just see if I can just highlight for you guys quickly. Next week, coming up next week, our last webinar for January, top 10 share picks. This is more from an investment point of view. So I'll be looking at the top 10 large cap stocks and some top 10 small cap stocks, and from a fundamental point of view, why we look at these stocks. And then I'll be putting up the calendar for February very soon. Those of you in Cape Town, our very first seminar for the year, trading derivatives. That's more for the traders, and that's on the 16th of February. But guys, from my side, thank you very much for participating. We had a good turnout. Here's my contact details. I'll send those of you that send the emails requesting the commodity document. I'll send it through to you guys. And again, disclaimer, remember what I spoke about in this webinar is more for educational purposes. Don't construe it as advice. Just highlighting a strategy for you guys. So it's not this to solicit any business from you guys. Okay, so I'm glad that everything went well today with regards technicals. And look like you guys saw my screen. Awesome. Until next week, thank you very much for your support. Keep well. Bye for now.